Welcome to All Things Social Security. Enjoy your video. Morning, afternoon, or evening. It is December 1st. Don't know when this is going to get out, but probably in the next week. I just wanted to give a heads up reminder because the end of the year is coming down. So all we have left is December. So I always like to give a reminder to those that are working, particularly if they're working self-employed while being disabled and they're either pending a disability claim at the moment. That could be SSD. It could be SSI, but I'm just going to focus on SSD a little bit, possibly because SSI is going to have other implications. But if you have a pending claim, or if you're thinking you might have a pending claim, you're thinking about making a claim, you feel that you're disabled and you've gone part-time, but you're procrastinating for some reason, things to look at now, because you can't change this after December 31st by and large. And what I'm referring to is the amount of money as a self-employed person you are earning, and that which will be net earnings from self-employment after you do your Schedule C, or if there's another version similar to a Schedule C that people do with their tax returns. I'm just familiar with the Schedule C as a self-employed person. So let's start with a person who has not filed for SSD, but is really reduced their ability to earn a lot because of disabilities. And they're still hanging in there and hoping to get better and all that good stuff. Just I guess, a piece of information that might make you want to just take a look at things before the month is out. If you are planning on filing for SSD, or potentially, or you have a SSD claim going on right now and you are aware of what the date last insured is. If you're not aware of it, it's the acronym is DLI. I have playlist, I think, called Date Last Insured. It is critical for those who want to get Social Security disability to make sure they have sufficient credits, i.e., they have paid the premiums in the manner in which we pay for those in the system. So our DLI, and we all have one, is never more than 5 calendar years ahead of today, whatever our today is. And for those of us that worked a little sketchy, have not worked at least the minimum level, which is 4 credits worth every year for the last 10 years, say, certainly the last 5, will have a very short DLI remaining in their future. It could be expiring next quarter, could be expired in the past. If that is something that might be in your history, if you have not been say at least a $8,000 part-time worker over the last years, if you're full-time, you're probably going to meet that burden. But many part-time people meet that burden. And that's something that I'm always emphasizing, because you don't have to lose your insured status because you can't work full-time or you can't work in the job you used to do. You can work sufficiently to keep those credits coming in at a very minimal part-time job. And that means if you don't have sufficient evidence right now for a strong SSD case, you still have time to develop it, and you're keeping that window way extended into the future, possibly the full 5 years. So what to do now if you are, and I talk to my clients about this, my clients who are part-time workers, but they're quite disabled from working full-time, and we're proving all the elements we need to prove in this very slow, sometimes marathon process, is look at what your earnings is, look at if you're self-employed, you got to look at all that revenue. What is the gross revenue? What will you be writing off in terms of permissible IRS tax deductions? I always give a forewarning that as far as the IRS is concerned, and even stated on their site, you do not need to try to get every business deduction you can get to reduce your taxes as fully as you might be able to stretch by with. You are, as I understand it, so all you tax prepare people come in if it's something different, and everybody do their due diligence, but you don't have to scrape and try to scrounge for every possible deduction. Think about it. Half the time we get smacked down, right, by the IRS. So look at what your bottom line needs to be. How much work and net earnings from that self-employment do you need to have those 4 credits credited to you for 2025? On the flip side, what if you are a person who is on SSD or striving for SSD and you're working self-employed, or you are a W-2 and you cannot be tipping over SGA? And SGA is somewhat of a black and white number when we're dealing with the number, but it's a number we have to deal with. So it could be that you have SGA earnings even after what you think is going to be your all the write-offs you can do with your self-employment, you're still going to be too high. And it's like, darn, I thought there'd be more expenses or whatever. I didn't expect that big payday on that one digger matter I did. Now's the time, like all businesses. Do you buy something that will be important for your part-time business to continue in the future? Maybe now's the time to incur that expense. I know I tend to do a lot of my equipment buying at the end of the year when I'm looking at my bottom line and going, does that pop me into a tax bracket? Maybe now's the time to buy that computer system, which the way the computers go here, we need them every few years because they really good. Well, between technology changing, software requiring more memory, all that kind of stuff, there's always something going on. It is a time of year where, get it in for 2025, that business expense, if you need it for 2025 to keep you below SGA. I should also remind the people that have pending claims or are beneficiaries, remember that your SGA can potentially be reduced by your IRWs, impairment-related work expenses. That can be your co-pays for the specialist appointments you have to go to periodically throughout the year for the conditions you have that are disabling. It won't necessarily apply to just your annual physical copay because everyone has to do that. So it's the ones that are specific towards your disability, and that without taking care of that disability, you would not be able to work while you're disabled, that part-time work. So it is always every year and all year round, keep track of those receipts, keep them together so that if you do topple over SGA by a few hundred in a particular month, you might have the receipts for that month to show that you, in fact, because you can subtract those off, have not gone over SGA. And that can save if you're a beneficiary, that can save your benefits going forward. It can you can't use it for TWP amounts, but I won't go into what TWP is here, but it can save your overall disability benefits because it can keep you under SGA. Even if some months are under SGA and not others, it can still keep you under, or keep you safe, I should say. And this is particularly so if you are teetering out of your 3-year window of your EPE, extended period of eligibility after you become a beneficiary. You don't want any SGA months. One SGA month kicks you right out of your disability benefits by and large. So it's very, very important to always know to keep under SGA when you are collecting. So going back to it, you need to get those receipts and know exactly where you have been earning. Have you earned enough to get all the credits you need to keep things going or to become insured if you had popped out of your insured status due to not working over the years? Then you're going to want to maybe kick in a little part-time work in December and build that up. If you're self-employed, maybe don't write off every little scrap you can take from the IRS and be willing to pay the taxes on more of your revenue. And if you are working and you need to write off business expenses to keep your self-employment, net earnings from self-employment under SGA, because you're already a beneficiary or you're a claimant, and that's your danger, now's the time to do that also, whether it's finding all the receipts that you might have disregarded during the year to make sure you have enough, or it's investing in whatever you need for that continuing part-time business going forward. It's not as easy if you're a W-2 person, everybody, because if you need more income, you have to ask your boss for some extra shifts, maybe, or some extra hours. And on the same token, you don't necessarily want an SGA month in December either. So it's really something you should be keeping an eye on all year round and kind of having a plan. That's what I try to have with some of my clients that need to work part-time to keep a roof over their head pending their claim. And sometimes even after their claim and they've prevailed, some people come back for a consult for getting back to work while protecting their benefits. And we discussed different jobs that can be done and to what extent and all that kind of business. But all the things, now is the time to pay attention if you haven't been doing it all year round, because you only have 30 days left, right? Super, super important. Anyway, any questions, feel free to post them below. And if you need a full-blown consult, of course, I'm available for that. Those are prepaid. But otherwise, if you have a general question and you think it's just suitable for a public video, I'm happy to address that particular issue, whether it's regard to this or something else, if it can be helpful for the general public. I'm happy to do it. But if you need a one-on-one with details about yourself, obviously that's not going to work. And that would require that prepaid consult. So, alrighty, guys, I hope you all had a great Thanksgiving, and I hope we all have a wonderful and Merry Christmas, or whatever holiday version you have in December. If it's not Christmas, I wish you the best with that as well. All right, everybody, God bless, and I will talk to you soon.